In that article, we talked about structural rotation. We talked about profit taking. We talked about this rotation that most traders missed entirely, something that we've been keeping an eye on for a very long time. We've been looking for profit taking and reaccumulation in the mega cap tech space since late last summer, and we're seeing it now. The headlines were really loud, option flow were heavy and panicked, but the charts told a different story. So let's walk through it, beginning with this weekly chart from February of this year. At the time, Apple had just completed this upthrust after distribution. This is a Wyckoff term. It refers to this upthrust after this long period of sideways action right here, which is profit taking. This is how institutions take profit at the top, and to unload the last bit of their position, they'll push price up above it. They'll draw in retail chasers chasing the breakout, confusing it for strength. It's very easy to confuse these upthrust after distribution for strength, but the low volume as it breaks out above these previous highs, you can see volume actually goes down. That is a textbook sign of profit taking. You can see this low volume evening star candle right here, classic signs of distribution. This was an immediate rejection and falling back down into the range, into this previous price range, and volume rising as it does. Volumes muted as it pushed higher, and then increases as price pushed down into the range. That is clearly distribution. That is clearly profit taking. And that kicked a multi-month process that played out throughout Q1. Most traders saw this as weakness. A lot of the retail community believed that the mega cap tech space was going to go into a deep correction. We had been tracking this and identified the mega cap space as a target for reaccumulation for quite some time. And so we had a little different take on this. And if we jump over to the monthly chart from May, you'll see that confirmed in the price action here, because in April, something changed. Whenever you see a long shadow like this on a monthly candle on higher volume, that's a sign of accumulation. That's a sign of major institutional flow coming in and absorbing supply as price flushed down below this previous range. That should have triggered an ongoing continuation or an ongoing trend down, but instead of expanding lower, we saw immediate absorption. Price stabilized here on big volume. That volume isn't panic selling. That's demand stepping in. Critical and structural signature of reaccumulation. We pointed out in the article that the clue is volume at the lows. If you're seeing higher volume at the lows, if you're seeing lower volume at the highs and on breakouts, that is a telltale sign of reaccumulation. They are taking profit at the top and they are buying up the lows.